to ADG Studios, where I try to teach you few little things about tradings, little tricks, how to enter a position, how to get out of a position. In the future videos, I'll do more about risk management, which is the most important thing. But as a beginner that you are, or maybe not, I just want to express that it's no holy grail about making money in trading. Without further ado, let's dive into the charts. First thing first that you have to do, you need to identify the trend. If the trend is up, you don't need to enter a short position or betting against the trend, thinking that the price will go down. You need to take in consideration before entering a trade just to look on the bigger time frame. So here we are on the Bitcoin. I like to trade Bitcoin because of the liquidity, the money that it's getting into the market or it's leaving the market. It's very high. This is actually just as a disclosure. It's how I start trading. What made me think about starting trading? People, they were making money. So I said, well, everybody loves money, so why not? I should give it a try. So full disclosure, I start entering the market in Bitcoin versus USD when the price was up here, around $13,000–14,000. Of course, I read a little bit about it, about investment and how to manage your portfolio. At the moment when I start trading, my portfolio was $100. So I start throwing all my funds, $100, into the market when the market was high here. I didn't know how to read the charts. So what I did, I was just plain and simple gambling. Here we are on the trading view. As you can see, let me on the weekly time frame. You can go where you see this little arrow and you can check it to make it, let's say, a month. And then each candle represents a month of trading. So, first of all, you have to identify the trend. The trend, as you can see, it starts from, on this exchange, Gemini, it starts from August 2016, and the price at that moment was 560C. You might be asking how I can see the price. Well, as you can see, the arrow is here, and if you look all the way to the right, where you have this cross, it shows you the price. So at that moment, in August 2016, was $573. And it went up all the way to almost $20,000. Yeah? And then it retraced. These traders or investors, they call it bull market. It has nothing relating to bulls and cows and stuff like that. It's just a terminology that the Wall Street came up with that. So it's considered bull market. The bulls, they push the price higher, and it means the sellers, they are not there. When the price of an asset, it goes down, it's considered, for consecutive months, it's considered a bear market. So the bears, they come into the market, or the sellers, and if there are more sellers than buyers, they push the price down where they think it's a normal value for that asset. So, identifying the trend, let's say for now. As you can see, this candle here, that we are right now in September 2020, it's going pretty much almost to the level where the bear market started in 2018. The actual candle that we have right now, it's red. That means it's a higher seller pressure coming from this at these prices. So the price can go down all the way to 0 or to 100. Or if the bulls, the buyers, they starts coming in, they can push the price higher. So from 1 month, as you can see, this candle here, if you zoom in, it's called engulfing candle, meaning you take the last two candles and you can see this candle here, it's bigger than the one that it was last month, the previous candle, and it's engulfing, it's getting higher. Here you can see this candle, it's lower than the one previously, and it's indicating a trend reversal. So that means, let's say you don't see this candle. When you see something like that, it's showing a higher probability, then the price will go higher. As I said in the beginning, there is no holy grail in trading. There is nothing certain. The only thing certain in life, their death and taxes. So there is no joke about it. But you have to take in consideration that it's a higher probability. So if you are in this position here and you want to trade the next month, think about this candle here. It's having a big fluctuation on price. This one that we call it the wick, this little stick that it's above, and the one that it goes down, it's explaining the price range that it was at that month. So when you move your cursor on that candle on the top here, let me circle it so you can see. I don't know if they let me do it. It shows you the opening price and the closing price for that month. So when you move it, you can see the opening price was $9,400. The highest one was $10,425 and the lowest was $8,800. So if you draw a line here and another line here, this is the price that candle, the price range was at that month. So let's continue. What you should do in this position, the closing, it's happening, as you can see, in $9,133. So it happened here. If you're comfortable and you think the price will go higher, as it indicates the last two candle formation, yeah, you enter a long or you throw money in the market. You don't have to throw all your funds. I advise, or if I don't want to give you any advice, I'm not your financial advisor, but what I will do in this situation, I will enter probably 10% from my portfolio in a trade that I know that I'm going to keep it for a month. I'm not going to day trade. I'm not going to wait 2 days, 3 days, or 6 months or something. No, I'll enter this trade just for a month because you're trading the monthly candle. So what would you do? You enter a trade at this price, 9,185. As you can see on top here, the lowest point at that candle was 89.14. So basically, you will have $200, $300 that you're probably stressed that the price go down. You can think about it that it's okay to get out from the trade or wait for it. In trading, what is making a lot of traders, including myself sometimes, to lose money or to get out from a position too fast is because you have a lack of patience. The patience is the name of the game. So let's say you enter right here, yeah, 9,133, and then you let it ride all the way for that month of July. When the month is getting close and you can see this big candle, it's printing on your screen, you can see definitely that it was a good move because this candle here was indicating a trend, a possibility of a trend reversal because of the body of the candle. The body was lower than this previous candle. Okay, so identifying the trend is very important. Let's talk about the current situation. As you can see, this is an engulfing bearish candle. That means the price is getting lower. But what date are we today? We're on the 26th, so we still have 3 trading days of this candle to close. The bulls, they can have the power to push it higher, or the bears, they will let it bleed even lower. And then you will know, okay, now we're talking about the trend reversal. So in this situation, let's say on the September 30th, the price is fluctuating between 10,700, 11,000, or even lower, 10,100. It's a good point to enter a position for short, or if you still have money on the market, let's say you bought it here, it's a high probability that the market will continue to go lower. So what I will do, I will take money out of the market, not all of it, probably like 20-30%, and I'll wait for the trend to reverse. So again, we're trading here, we're talking about a monthly candle. A good indicator about how the trend is performing, I like to use something called 21 exponential moving average. You can find it here by the indicators, and you put EMA, and it shows you over there EMA. Yes, right here, EMA, exponential moving average. I like to trade the 21. So what I do, I go on the settings, click on the settings, and it shows you 200-day EMA, 200-day 20 EMA. So you can delete this and leave only the blue one. When the trend it's going above that 21, it's indicating a bull market. The prices, they will go higher. When the price goes down, or the trend is going below, like we see here, crossing the 21 and closing, this is very important, and closing below the indicator of line 21 exponential moving average, that means the prices will go lower. Well, now you can see here, then the price reverse. Yes, because you have to remember, you have to look at the formation of the candles. So don't put too much confidence on one indicator. You need to basically be like a sniper and check all the possibilities. So you look here, as we talked a little earlier about the trending. This candle, the green candle here, it's higher than this one. So this one is called bullish engulfing. The bulls, the buyers, they're pushing the price higher than it was the previous month. Like here, this is bearish. It might signal a correction, or the trend is gonna go lower. So here, let's say you enter this one, you take this trade here for a month, and you're expecting just the price to go higher. So as you can see, the third candle that it's after this one, because this is engulfing, it's pushing the price higher, and actually you're in the profit. Okay, let's move a little bit to lower time frame. I mean, think about it. You want to do a trade once a month? Okay, you want to do more trades in a month, then you got to look on the lower time frame. So what I like to do in the beginning, before I start trading, I start looking and analyzing the chart from a higher time frame. So we've been to a month. Now let's check to the weekly. So each candle will represent a week. We go here and we check to the weekly. Okay, so here we are in this week, which is started on September 21st and is gonna finish tomorrow on the 27th at 5 p.m. And if you listen to me, what do you think it's this formation signaling? Well, I'll tell you if you don't remember. This is showing a possibility, then the trend can reverse. So you don't have a continuation that it was in a month. The month shows the price can go down, but think about it, we're still trading in this month. We didn't start a new month. You look on the weekly. The weekly shows you as today, Saturday, we have only one day left on this week, and you see the price range that it happened on this week. So opening was 10,922. You can check it right here if you click approximately. And at the moment, the highest point was the lowest point was 10,139 and the highest point was 10,997. So basically almost $1,000 price difference in 7 weeks. Yeah, price range, not price difference. Well, the week that you have here compared with this week, it's higher. Yes, so the traders, they call this, I think it's called a dragonfly, and usually it's no, sorry, this one is called a bull hammer, which indicates the bulls, they push the price higher and higher and higher, and they don't like this low price, so there are more buyers than sellers, indicating a possibility of a trend reversal for the next week or continuation. Because right now, the last 3 candles that you look here, it shows a long wick on the bottom, then the price moves really high, then the price here rejects. So this is the opening, yeah? It's opening here, it trades up, it comes down, and it's closing at this level. Then the next week it's opening at this level, it goes a little lower, then it moves a little higher, and the bulls, they push the price all the way here, and here the sellers, they take over the market and they push the price lower, and they close the wick here. Then the next candle, it's opening at this price, it goes lower, actually no, it goes a little higher, the bears, they come over, they take over the market and they push the price all the way down, and then the sellers, they come up and they push the price. How do you know that? Well, you look on the daily. This is the weekly, so each candle here is going to represent the last 6 days. Tomorrow is the closing. So when you look on the last 6 days, so let's do a let's circle the last 6 days. You count 1, 2, 3, 4, 5, 6. So this was the beginning of the week. Yeah. So this is our week history. And you can see at the moment that we had a red candle here, suggesting that the market needs to breathe a little bit. What's happening today? Today the market, it shows that there are more sellers at this level than are the buyers, even if the candle is green. Where is the 21 exponential moving average? The 21 exponential moving average, it's hovering right at the level. As you can see on the right side, you have a blue mark here. The blue mark indicates the price of the indicator, 10,721. At the current level, it's the exponential moving average. So, if the trend is lower, the price is going lower than the EMA 21, indicates that you should be out of the market. So let's analyze this in a history. How did it play out? Okay, we can start any point and you can do that on your own. Let's say you're on the market here, yeah? This is a crazy day. Remember this day I was at work and the profits, they were gigantic. I started the day in the morning almost in a negative price. The price was going lower than this level, but another indicator showed to me that it has to reverse. A lot of people, they were talking at that time, the price is gonna go down, 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 the market is down, the 21 is down. So I didn't rely only on this indicator, the 21, I rely on another indicator, and I said I saw more confirmation and another indicator, different indicators telling me that the price might reverse. In trading, you always have to take in consideration might reverse, or might go up, might go down, nothing is certain. So as you can see clearly, we were below the 21, so the trend was lower. It broke this level and the price starts going up, and it goes up for a period of days until it's piercing and it's closing below the 21. So this candle here, it's closing below the 21. Let's say you buy right at this level, yeah, and you put your stop loss basically here. So we'll talk in another video about risk management. You don't have to take all the trades, you have to wait. You don't have to trade like a degenerate all day. If you want to learn, that's better than throwing money on the market. So you take this trade here and you ride the price until it's piercing this level. So basically, I'm gonna draw a few levels. You enter at this level that it's 8,195, and then you get out as soon as you have confirmation at this level. You have the confirmation, it broke the 21. So all this region here, this is your profit. This is your profit. It's not all of it, but at least you have some money left. You leave the market with some money than to lose some money. Emotions is a money killer. Always trade with the indicators. Always trade with the indicators. Okay, so let's go back to 21. So right now you are out from the market. Yes, you are out from the market. And what you do, you have to wait for the price to go above the 21. What do you know? 2 days later the price goes higher. So what do? You throw some money on the market. Again, not all your money. You have to protect your capital. 10% is more than enough to enter in a trade. So you enter a trade at this level, 8,938, but what do you know, the next candle, it shows you that it's breaking the 21 again, and it's a bearish engulfing candle. The price, the red candle, it's higher, is bigger than the green candle. That's another indication that the price of the asset is gonna go lower. So you get out. So basically, how much would you lose? Let's count this winning trade that you have here until here. You will make 6%. If you put $100, now you have $106. Okay, so you make 6%. So you have $106. Okay, now you enter here, but the price goes against you and you get out from here. So you lose 2%. So you're down from $106 that you had, you're down $2.15, $2.15, $2.40, something like that, 2.4%. So, my friend, it's all about survival. Okay, big, huge indication. The trend is gonna go down. The trend is gonna go down. Okay, below 21 EMA and the bearish engulfing candle. Look what happened after that. Again, when you trade, you don't have these candles in front of you. Okay, so you're out of the market with $103 approximately, yeah? You want to start trading this one when you see? I wouldn't suggest. Why? Because the sellers, they're still there and they're pushing the price lower. Yeah? So you wait. And these candles, it goes higher. So what you do, it's important to see, you don't have to get into the market right away. You have to wait. So you look on the next one. So let's say you enter when it's closing at 7,502. Let's measure it. You enter at 7,502. What's happening after that? It breaks again the 21. So here, on the next candle, it goes down 4%. You're still in the trade. You don't close it because the closing time it's actually like 3%, 3.2. But you're still hovering above, so you give it another shot. The next candle is opening right out from the red, from below the 21, so you're out at the 335 lows. So from $100 original investment, now you're down probably to $98, $99 approximately. Yeah, let's move here. Here you have another confirmation. Price will go down. Why? Because the candles are more sellers than buyers. Bearish engulfing, yeah? This was bullish engulfing, as you can see here, compared with this one. Okay, now we go into this one. You're waiting, and now you're entering a trade at this price. Or you have the confirmation, then the trend is about to reverse. You look behind, you look back, and you see all this slope of the 21, it's kind of smoothing out. It's not that aggressive that it was here in the beginning or here. Yeah. So what you do, you wait for a confirmation. The confirmation number one, above 21. Are you above 21? Yes. Another confirmation, how the trend looks. Well, it looks like kind of pretty bit up, but the 21, it's taking of a breather. Can go lower, can go higher. Okay. Again, you enter a trade at this level, 7,200, 7,250, and you wait for the price to go in your direction. So you enter the price here and you wait. You wait. You might say, am I selling now at this candle? Am I selling now? The price is just closing just below, and you see the wick on the bottom showing you there are a lot of buyers or more buyers than sellers. So you wait. The next candle it's opening slightly below the 21, but you have a wick, and you wait, and the price goes your direction. So at this moment, you enter that $99 in the market, and you leave the trade for a longer period of time because there's no real point for you to sell it when you're in profit. You need to be disciplined. So basically you sell it as soon as you have a closing day below the 21, or the candle that it's painting red, it's bigger than the candle that it's green, the previous candle, like you have here. Well, here you're getting out from the market. You don't see a wick. Actually, you see a wick, but the price it's below 21. It's a bearish engulfing. So you're getting out basically at this price. So let's see how much money, or as a percentage wise, how you made. So from 7,250, you're getting out of the closing, you make 32%. So from $99, $98, you cash out another $30. So are you still in profit or are you losing money? Well, as I explained to you, probably in a very simple way, how to start trading using this indicator. 21 exponential moving average and the two candle formation, bullish or bearish. You have here, this is bearish engulfing. Let's find the bullish. You might ask, should I trade here? Should I trade here? No, you don't have to take the trade every day. You just have to wait. Yeah, just have to wait. Here, another one. What is this? Oh, I should take this one. I think the price is gonna go higher because the red candle is smaller than the green one. Yes, but you're below 21. So you don't take this trade. The price might go higher, but it's a higher risk, low reward than the price. Then you don't have a confirmation. So to summarize what I explained in this video, when you take a trend, first look at the trend. The trend is higher or lower, or it's flat like you have here. You use an indicator called 21 EMA. And the other things that I try to teach you today, look at the formation of the candles. 2 candle formation, 3 candles formation. That's all that I had to say to you today. I don't want to talk and overcharge your memory. Try to look at other traders that explain trading for beginners. I'm expressing here just my knowledge, and I'm not your financial advisor. At the moment, I'm thinking to take the Series 6 or Series 7 classes, talk about economics, and maybe you will learn something from me. I'll be more grateful if you learn and think. And remember, first thing first in trading, it's about survival. Even if you are an experienced trader and the trend goes against you, you need to know when to cut your losses. You need to know when to get out of the market. Even if you lose some money, it's no problem. It's better to lose some money than to lose a lot of money. Just one example. Let's say you enter here thinking that the price is going above 21 and you don't take a stop loss. Actually, you don't get out from the market and you just hope. Hope is the last thing in trading. Hope. There is no hope in trading. No hope. So you enter here thinking that the price is going to go higher because you stay in a losing trade just because you're stubborn. How much money you'll lose? To the lowest point, probably 20%, 27%. And you say, so what? It's just money. Yes. But here, are you going to say the same? So what? It's just money. I make 34%. No, here you're going to be so happy and dancing and telling everybody, I make money, I make money, I make money. I'm the king of the jungle. I know how to trade. I'm a professional trader. But you don't tell people what happened here. Man, I lost 20%, 28%. Just keep your level headed. 21 going down, the price is going down. 21 going up, the price is going up. When to get out? When it's crossing the line, the 21, and it's closing below the 21. When you enter, just look at the formation of the candle and make sure that you're above 21. You can play with this every time frame, 4 hours, 6 hours, 2 hours, 5 minutes, 15 minutes, 30 minutes. You know, if you trade on the 30 minutes, you should not be in the trade too long until you have the confirmation. You enter a trade here, and if you're trading with leverage. You enter a trade here. This is continuation. 2 red candles. Continuation. The 21 is moving pretty drastically lower. So you take the short trade here, and basically you closing it right here. So basically you're on a 4% profit. When you trade with leverage from 4%, if you play 5x, 5 times, that's 20% profit. If you play with 20% leverage, that's very risky, only if you're inexperienced. Alright, that's all that I had to say today. I hope you enjoy it. I hope you like it. I'll try to make more videos and try to do virtual trading or paper trading before you enter your money. I hope you are good, and we'll see you in the next one. Take care, my friends. And if you like this video, please leave a comment. If you have questions, ask me, and I'm at your service. Take care. Bye bye.